Well, folks, you got to be flipping my flapjacks. We got a lot to go through in today's video, and I mean a lot to go through in this one. Going to put a little bow on Palantir here. Obviously, the massive move here today, 30% plus. Congrats to all people that have been, fellow shareholders out there holding the stock through the bad times and the good. Man, just an insane move. So, I want to put a little bow tie on that one here today and kind of speak about the last few things in regards to Palantir, okay? Because Palantir might not be in the news here for a little bit unless we get some new big news in regards to some deals or whatnot, right? Elf on a Shelf, they reported earnings after the bell. The stock is, let's just call it going up. It's up to about $183 after hours, so it looks like it's on its way to 200 plus. We'll speak about their earnings, my opinions, everything going on there, okay? Fubo has some potentially scary bad news going on right now. The stock should be down pretty big tomorrow, and we'll speak about that and how scary it actually is for Fubo and if there's an opportunity there or not. Then we're going to get into PayPal. PayPal earnings are in less than 24 hours from now. We'll talk about am I feeling confident or am I feeling, let's just call it very worried in regards to PayPal. And then we're going to get into Tesla. I decided to sell out of my last put option contract. In regards to Tesla, I made a lot of money on this one, obviously, right? 73% roughly. And so we'll speak about why I went ahead and made that move here today. So now I'm not short or betting against Tesla at all now at this point in time. Why did I go ahead and do that? And then where did I put that money? And why did I put that money there? Okay, so we'll speak about that in today's video as well. I appreciate y'all joining me as always. Only thing I ask in return, smash a like and make sure you subscribe to the channel. That's it. Smash a like, make sure you're subscribed down there. That's it, folks, okay? Little two housekeeping things real quick here. PayPal earnings and conference call tomorrow. I will be live streaming that on Twitch. So pin comment down there if you want to join me for that. Mark it down in your calendars. Put it on your phone. Put it on a sticky pad. Put it on your head. Do whatever you got to do. If you care about PayPal stock, that's going to be a massive earnings tomorrow. Okay, so that will be the main pin comment down there. Second pin comment down there if you want to see the exact stocks I'm buying and selling each and every week. Then join my Patreon. That will be that'll be the second pin comment down there. And I got two different tiers. This one is you get to see the moves I'm making, plus you get access to the Discord chat there. And then this tier here, you also get access to my Become a Master Stock Market course, my #1 stock market course ever. Okay, so that will be the second pin comment down there if you're interested in that. Okay, so Palantir. I mean, just an insane move, right? 30% plus. It's not very often you see a 30% plus move in regards to a stock, right? And I was surprised. I'll say that. I was surprised to see a 30% move. I woke up this morning, and here's the deal, okay? I woke up, guess what I did first? I went on, my tracker to see what's going on with stocks. And I went on there thinking, okay, Palantir probably up in the 15 to 20% range. And I woke up and it was already up over 26 percentage points. And then it expanded the gains from there. I was pretty shocked to see that. That was like a whole other upside of a move there, right? And so I was pleasantly surprised, as I'm sure all Palantir shareholders are surprised, right? No, keep in mind, a lot of bulls in regards to Palantir, this is still like little money times, okay? So the fact that the stock closed at $21 and some change here today, for a lot of people, they have price targets of $50, $100, some even several $100 on Palantir for the next several years. So to see it at 21 for a lot of bulls, this is nothing. Like, this is just the start of things. We're still in like the first or second inning in regards to the Palantir story for a lot of people out there, right? So that's a little food for thought, right? I spoke in detail about Palantir's numbers last night, and I thought there was a lot of good in there. I thought there was a few things that weren't that super exciting, but I thought there was a lot of good in there. And obviously, the big thing was the commercial revenue in the U.S., right? 70% up year over year. I think that's what got everybody really jacked up in regards to the stock, right? Now, this is a little illustration I have for you guys, okay? And this is kind of what's going on now in regards to Palantir stock. You have a lot of people that have been tracking this stock. Let's call them the naysayers, the people that never believed in this one, but have kind of been watching it from the sideline, either from the perspective of trying to see if there's an opportunity, or from the sideline of like they've been kind of rooting against the stock, maybe they've been short the stock, maybe they've just been wanting to see retail lose money. There's a lot of people out there, believe it. It's kind of sad and sick, but there's a lot of people that want to see retail investors lose money. It makes them feel good about themselves. They pat themselves on the back whenever a retail loses money. It's pathetic, but it is actually there's a segment of society. Hey, they're on the message boards, they're on YouTube even, they're on different places, and these people Literally just wait for the downfalls of popular retail stocks, and Palantir is one of those, okay? Now, recently, some of these folks, the numbers are starting to get so impressive that even some of these naysayers that have been on the sideline are starting to jump on the bandwagon, right? Even some of the Wall Streeters that have, laughed at Palantir a couple of years ago, I'd never consider Palantir. Even some of those Wall Streeters now are jumping on board, right? And so they're joining in on this party, and they're the ones that are spiking the stock huge. They're the ones that are sending that stock up 30% plus today. It's not the bulls. Did I buy any Palantir shares today? No. I wouldn't have had an objection to buying Palantir shares, but I wasn't the one pushing it up today. This is people that have been on the sideline in regards to stock who saw those numbers and like, dang, man, it's now or never. I either get on this train at $20 or I get on at $40 or $60 a few years from now, right? And so that's the way I think a lot of people are looking at this. And this happens all the time in the stock market, right? Where stock can go from very hated as Palantir was to very loved, right? Meta, perfect example of this. No one wanted this stock in 2022. There's people selling shares at less than $100 a share. Somebody sold me shares for $88.94. They didn't want any piece of this, and now we're in 2024. And very shortly here, the stock's going to be over $500 a share. Very shortly, Meta will be over $500, and there will be people gladly paying $500 for Meta and $550, and that's in a matter of less than 2 years, right? From no one wanting it to now. People didn't even want to buy it under 100, and now people are going to be paying 500 soon for this stock. That happens quick, right? Tesla, it can work the other way where people are all on the bandwagon and then they go jumping off, right? And if we go back 3 years ago, everybody was on the Tesla bandwagon, right? It wasn't just people like myself in the early bulls. All of a sudden, it was everybody and their grandma wanted a piece of Tesla. It was the hot money, right? Wall Street wanted a piece of it. And then they all jumped off, right? They couldn't wait to pay 400 plus for it. Now, last couple of years, they've had trouble paying 100 something for it, right? Honest, even it happens in small cap stocks, but it happens to a much more insane, let's call it extent in regards to these sorts of stocks. Look at Honest. Honest stock is up 175% in the past 3 months. 3 months, right? It happens quick. Did you guys see the news in regards to Honest today? Did you see it? Check this out, okay? Alliance Global Partners initiates Honest with a buy rating, $5.75 price target, 12-month price target, right? This stock was $1 3 months ago. $1. So if you're saying $1 to $5.75, you might not sound like much in your head, but on a percentage basis, that's ridiculous. If that was to happen, that would even make NVIDIA look like it didn't do that well. It's ridiculous. If this stock's actually $5.75 in less than 12 months from now, when it was just $1 3 months ago, that even kills NVIDIA's gains over a 15-month span. That's ridiculous, right? But this is how fast it changes from the sentiment, right? And so this will continue on, this kind of jumping on the bandwagon here, until the numbers are seen as unfavorable, until they aren't reporting as impressive of earnings per share growth year over year, or until, the U.S. commercial business doesn't seem as exciting, or the overall revenue growth doesn't seem. Until that happens, like, you're going to have more and more of the naysayers jumping on board and joining in on the Palantir party. That's the bottom line with this. And, the party can last for years. That's the thing you got to understand about stocks, right? The party can last for years in terms of people jumping on the bandwagon one after another, until eventually the wagon's too full and then something shortly happens and a wheel breaks and then a bunch of people fall off, okay? That's a story for every stock in the stock market pretty much in history, okay? So a little food for thought in regards to that. Now, elf on a shelf, my best stock ever in terms of percentage gain, in terms of holding the shares, just ridiculous, right? 2,280%. And it looks like we're going to be up a lot more than that soon here, okay? Now, I looked at elf on a shelf's income statement, and there was a lot of good here, but there was one really bad thing. Okay, so look at net sales, up to $270 million for this latest quarter versus $146 million a year ago. The revenue growth is ridiculous. There's no one putting up these sorts of numbers almost in the stock market, never mind in the beauty category. This is insane. Cost of sales, they kept that very in check. So their gross profit went to $191 million, almost $192 million year over year when it was $98 million in the same quarter last year. Now, here's a problem. Selling general and administrative expenses was up to $160 million this recent quarter versus $75 million. That's a problem. It's a big problem. And we'll speak about what's going on there, in my opinion, in a moment here and kind of explain that a little better. And if that's like a longer-term problem or more of a shorter-term problem? Operating income came in at $31 million versus $23 million in the same quarter last year, and net income came in at $26 million versus $19 million at the same time last year. So good they had net income growth, good they had operating income growth, good they had insane gross profit growth, good they had insane sales growth, but their profitability is not up even remotely close to as much as it should be, in theory, and that's why I gave them a C+ overall for this earnings, okay? Now, there's some interesting things going on here, okay? And we're going to get a little tells from the balance sheet. So check out some of these differences on the balance sheet year over year, right? Accounts receivable, they went from $66 million to $121 million in accounts receivable year over year. That's interesting. Inventory went from $81 million at this time last year to $204 million of inventory, right? Which clearly means they're ramping up for another massive revenue year ahead here in 2024, right? But if you're going to buy all that inventory, that costs a lot of money. It's not like that's free to just keep that inventory around and have that inventory build, right? So that's something that hurts you. And then look at this, prepaid expenses and other current assets went from $28 million to $56 million, right? So their total assets ballooned, obviously, from $555 million to $1.1 billion here for Elf on a Shelf. So I'm looking at a couple things that kind of hurt the company short term here, okay? One is they're spending a bunch on marketing and digital spend, and from my understanding, they are going to have a Super Bowl commercial. So maybe that's a big prepaid expense they did, and obviously the filming of that and the prep and all that sort of stuff. I mean, it's a lot of money goes into a Super Bowl commercial. I can tell you that because you're talking about this is your big moment. You've got, easily 100 million plus people all watching, glued to that TV, watching the commercials, and that's your moment to shine, right? And so it's very expensive, not just to pay for a Super Bowl commercial, but in terms of making sure that ad is phenomenal, right? Very expensive. So nonetheless, that's a huge expense there that probably hit in this past quarter because you're getting ready for the, maybe you're prepaying that up front, right? And then also, they did this big acquisition that closed on October 4th, right? Which that's a very fast-growing brand. And so there's probably a big expense associated with that here in the short term as well. So the moral of the story is, it makes their short-term selling general and administrative expenses look ugly, but I think that's going to fade off over the next 12 months, essentially. And I think we'll get back to much more normal levels. And I think as that revenue hits, the profitability is going to skyrocket for this company. So it's one of those things, it's very short-term, and it's going to pass, okay, in regards to that, right? Now, looking at their guidance, they upped their guidance massively here. They took their net sales, this is their fiscal 2024, they took it up to $980 to $990 million. And keep in mind, Elf basically comes in and kills their numbers every quarter. So whatever Elf's putting out here for numbers, you can almost bank that they're going to likely beat those numbers and beat them substantially. So basically, my thinking is the company's expecting now 980 to 990 for fiscal year 2024, right? Which they're already been in that year for a bit here. Probably doing $1 billion plus, probably $1 to $1.1 billion of revenue is my guess, right? And that's up from the $896 to $906 million previously. And then their adjusted net income now expecting $164 to $166 million in adjusted net income from $144 to $146 million, right? So the moral of the story is things are getting really good in regards to Elf, in regards to the growth profile specifically, right? So the stock, in my opinion, is on its way to 200 plus. The company's at escape velocity. There's no stopping it now at this point in time. And it's just a question of how big is Elf Beauty going to grow to? That's the only question. Is this going to grow to be like, a $20 billion market cap company over the next, 5 to 7 years? Is it going to grow to be like a $50 billion company? Or is this going to become like a $100 billion conglomerate of many different beauty and makeup brands all in one? I don't know. We're going to have to see. All I know is Elf's now at escape velocity, and you can't catch it now at this point in time. It's gone. And so, we're on our ways to 200, and we'll build from there. The world is theirs when it comes to Elf Beauty. It's amazing. I mean, when I invested in this company, this was not the same company in terms of where they were at with their business at that time. They're going through a lot of struggles, and now they're just the most well-positioned beauty and makeup company in the world. So the world's theirs. You know, it's their game to lose now at this point in time. They basically control their own destiny. And it's pretty unbelievable to see what they've pulled off here at ELF, okay? Now let's go ahead and talk about Fubo. So Fubo, I'm expecting to be down 7 to 15% tomorrow. And the reason I'm expecting the stock to be down 7 to 15 percentage points tomorrow is scariness that came out. ESPN, Fox, Warner Brothers, Discovery to launch joint sports streaming. Oh my gosh, top news on CNBC. Yesterday we had top news because Palantir was spiking. Now we got top news is something that could be bad, scary for one of my stocks, right? Check this out. ESPN, Fox, and Warner Brothers Discovery plan to launch a joint sports streaming service later this year. The platform, which will be owned by a newly formed company with its own leadership team, does not yet have a name or price. The product will be a skinnier bundle of linear networks than a standard cable offering, specifically tailored for sports fans. Okay. So, right off the bat, obviously that's really scary for Fubo. Anytime, because Fubo's known as the streaming network for sports fans, right? It's the one. And so it's seen as a scary move for Fubo. It could also be seen as a scary move for YouTube TV as well, right? But definitely seen more as a scary something for Fubo. My thoughts on this is, to me, this sounds like a desperate disaster move. A complete desperate disaster move. Because here they are, they're going to form a new company with its own leadership team, but they've got to get all these different sides together, Warner Brothers, Fox, ESPN. I feel like there's going to be a lot of bickering, fighting, negotiating, back and forth, and I don't know about this. If it was just one service, that's one company, okay, I understand, but the fact that it's 3 different guys all combining here, I don't know. I think there's going to end up being a lot of problems. And I mean a lot of problems in terms of execution on actually making sure this is properly executed. And so the moral of the story is it's going to be very scary for Fubo in the short term, but I'm not sure this is even going to work out the way people are thinking it's going to work out initially. And by the way, do people even think this is going to work out? Well, if you want to know what Wall Street's really thinking about this, look at Disney stock after hours. Is Disney stock spiking big on this news? No. Not only is Disney stock not going up, it's going down after hours on this announcement. It's down 1.3%, right? So Wall Street smells desperation the same way I smell desperation here. This seems like a very desperate move by a very desperate Disney whose stock price has massively underperformed for the past 5-10 years, and they're trying to do whatever they can. And this sounds horrible. I'm just looking at this. I'm like, I don't know how they're going to make this work with all those different sides like that. That seems like a disaster, man. It really does, because all of a sudden one side's going to say, no, we don't want to really give away this content. We want to keep this exclusive. Then another side's going to fight and say, wait a minute, we just gave away our best exclusive content on the platform. Why you guys not do? Guys, sounds like a lawyer's nightmare. Sounds like a CEO's nightmare. You couldn't pay me enough to run that service. You couldn't pay me enough to go in there and run that. Heck no. Heck no. Okay? All right. Now let's talk about PayPal. Then we'll talk about Tesla, getting out of that position. And then we'll speak about, where I put that money and why and things like that. PayPal, obviously, reporting earnings tomorrow. Am I feeling confident? Am I worried about this? All those sorts of things. Well, okay. So there's some things that make me feel good. There's some things that make me feel worried, okay? So I feel good in regards to the numbers. I feel comfortable with the numbers. I think PayPal is likely going to come in with either meets or beats on bottom line and top line. So I feel good about the numbers. The conference call, I feel very good about the conference call. I listened to Alex Chris's last conference call. I was very impressed. I think he's going to have another very good conference call overall. So that's the main important things, numbers and conference call. I feel good about those. I feel a little worried at the same time, though. And here's why I feel worried, okay? It seems like a lot of retail folks have gone long PayPal here recently. And sometimes I almost feel like it's a trap when a lot of retail folks all go long one stock, because it kind of seems like the market wants to always screw retail folks. So I don't know, that makes me a little worried, okay? A little worried in regards to that. It's just kind of like, is there a trick? Is it a trap? There's something here, right? Secondly, there's a lot of short-term people that are very attracted to PayPal right now, and the reason being is PayPal's trading very cheap. It looks like it's primed for a big pop to the upside here in 2024, where the stock goes from $60 to maybe at the end of the year $100, $150. But when you got a lot of short-term people, if the numbers aren't quite as impressive, or if they feel like there's any downside momentum, they'll be quick to jump ship. A lot of these people have set very tight stop losses on the stocks. So if all of a sudden, the stock goes down to 59, they're going to jump out, and it kind of sells, sends more selling pressure. So short-term people kind of worry me a little bit. And there's a lot of people that have been buying call options on this one, which kind of gets back into long retail, like there's got to be a trick here, right? Because I have seen a lot of people loading up on 150 calls, 120 calls, 145 calls, those sorts of things. And that makes me say, ooh, wait, are we really going to have this be good, right? Now, there's a new good thing I've seen, and I actually reacted to this. I actually reacted to several different things in my video earlier today on my reaction channel, right? Jeremy Lefebvre Makes Money. But one of the things I reacted to was Josh Brown, was talking about how he sold PayPal stock off completely. And so I do like that some of the more Wall Streeters are kind of moving out of PayPal stock prior to earnings. And I like that there's more fear there on the Wall Street side, because that makes me think there's probably more upside momentum there if the numbers are pretty good, the conference call is pretty good, and you can see a momentum there. So I did like that overall. It's going to be massive tomorrow. Like I said, if you want to join me for that, baby, I'm expecting about a 7 to 12% move in PayPal one way or another after hours tomorrow. That's kind of what I'm thinking. But yeah, we'll be reacting to the earnings in the conference call tomorrow. Mark it down now. Once again, that's pinned comment down there. Make sure you join me for that one if you care about PayPal. It's going to be insanity, okay? By the way, there's other earnings tomorrow that after the bell that are going to be fun to react to. They're not just PayPal. We got Disney reporting tomorrow and Winning Resorts reporting tomorrow, plus one of the highest valuation names in the entire stock market, ARM's reporting after the bell tomorrow. So it's going to be a fun one tomorrow, okay? So I had my last put option contract in regards to Tesla. This expires September of 2024. There are 255 puts in terms of strike price here. And I've made a lot of these put options over time. And this was my last contract in regards to this, $3,000 plus in the gains. And so I said, okay, this makes sense to take the profit now and move the money elsewhere, okay? And let's speak about why I sold out of this. Like, what do I see happening with Tesla from here, and then where do I put the money, okay? So first off, there's so much bad news priced into Tesla stock now at this point in time that now I feel like if I'm banking on Tesla going down more, it's because I feel like the Nasdaq's going to go down more, right? But here's a problem. If my only bet is that, well, Tesla could go down more because the Nasdaq could fall 5-10%, well, I could say that for a lot of other stocks in the market as well, right? I mean, if the Nasdaq goes down 5-10% and has some sort of big pullback here, the Tom Lee type pullback here in the next month or two, well, any stock could have that, right? So it's not like it's just Tesla. So I don't like the fact that I would be betting on just the market going down. That doesn't make me feel too comfortable in regards to that. And I think there's stocks with better opportunity to go down quite substantially if the Nasdaq gets hit, right? And also, these options could start decaying much more rapidly as we get closer and closer to expiration. They expire, obviously, in September. So my thought process has never been necessarily to hold it all the way to expiration if I was already up huge in the position. I'm already up huge in the position. It makes sense to kind of sell off that insurance and move the money elsewhere, right? Which whenever I go to hedge, I always think about it as insurance, right? No different than if you're going to get car insurance, home insurance, health insurance. The plan is to not use it and for it to expire worthless, right? That's the way I think about hedging. But if I can make a bunch of money on that, then that's awesome. It saved me a bunch, right? No different than, you don't plan on getting in a car accident, but if you do get in that big a car accident and your car's totaled, you need to get a new one, that $100, $200, $300 a month you were paying, all of a sudden you're like, dang, thank goodness I was paying that because my $35,000 car is wrecked, right? So that's the thought process around hedging for me. I use it as insurance. But when I can make big profits on it, that's like the best at that point in time, right? Because it's like, wow, I paid for this insurance and then it actually worked out. Like, glad I did, right? No, where I went ahead and put the money is I went ahead and bought 4 contracts on CMG puts here. I paid $16 a piece for those. These are $1,500 puts here on CMG. Now, why CMG specifically? Great company. There's no debating CMG is a great company. First off, there's no debate that. Like, it's been an amazing stock over the years, amazing company, right? As Tesla has. And, man, we made a lot of money betting against that one, right? Doesn't mean we're going to make the money on betting against CMG, but these are great companies, and sometimes great companies fall a lot. Meta fell 70% peak to trough. Nvidia fell, 50-60% peak to trough. AMD fell. Shopify, Netflix, you can put them all. Great companies can go through some very tough times if they're set up very poorly. And I think Chipotle is set up very poorly here, okay? And so here's kind of my thinking in regards to this one. First off, it's a burrito chain trading at ridiculous valuations, okay? It's a burrito chain trading at ridiculous valuations, right? It's going to get wrecked if the market falls in any substantial way, right? Bottom line with that, when you're a burrito chain selling at a 45 plus forward PE and your biggest growth days are behind you, man, if this market goes down at all, this baby's going to go down rapidly. It's kind of like a put option basically on the market in general, right? So that's first way I kind of think about that, which once again, it goes back to insurance and protection of my portfolio, all my long positions, the millions of dollars I have in long positions, right? Next up here, the company hasn't really been executing very well. Wall Street's given them the benefit of the doubt, but I'm looking and I'm like, this is not impressive. They missed an EPS here, and they had missed so many revenue numbers over time here. I'm like, that's just not great execution from the management team. Now, to add insult to injury, I did the math last night, and according to my math, around roughly 14% of Chipotle's restaurants are in California. Okay? No, there's a lot of problems in California. I think we all know that, but one of the problems is they're raising minimum wage. So they just raised minimum wage starting January 1st to now $16 an hour for all employees, if fast food restaurant employees, okay? So that's a problem. That's a big number, but that's not even the worst of it, okay? Check this out. I was reading a little more in depth here. California-based fast food workers for chains with 60 or more locations around the nation, Chipotle would be that, will earn at least $20 an hour beginning in April. So, the moral of the story is if you go into a Chipotle in California, the person who's scooping your food out there, or whoever's cutting avocados in the back or whatever, is likely going to be making more than $20 an hour very shortly here, okay? And what is your biggest cost when you're running a restaurant, right? Or a fast food restaurant, whatever, right? It's almost always labor and obviously your food cost. And so labor is a huge extent to that, and Chipotle's labor. And so how does Chipotle offset this? Well, they have to go up in price, right? But the more and more you go up in price, the more and more consumers say, I used to eat it twice a week, but now I'm going to eat it once a week. Or I used to eat it 3 times a week, now I cut down to 2 times a week, right? Or I don't go there at all, and I just go to Taco Bell or Del Taco, and maybe I don't like it as much, but it's, half the price compared to what it would be at Chipotle, right? Because not everybody's in the financial position to, I can tell from my standpoint of me back in the day, I probably wouldn't even have gone to Chipotle. I used to like to go to Chipotle back in the day when I, didn't have a ton of money because burritos were like $5 or $6, right? Now you're looking at like $10 and up pretty much. So it's completely flipped in regards to that, right? So my thinking in terms of Chipotle for 2024 is I think margins are going to disappoint in 2024. I think earnings per share will disappoint. I think comp store sales will disappoint, and I think revenue is going to disappoint. And if that all plays out, you can't command the crazy PE this stock has at that point in time, right? Which would mean the stock would get crushed from about February 2024 through about February 2025, if that plays out, right? And I could be wrong. Maybe they kill it on margins every quarter, EPS, comps, revenue, and that's fine. I could be wrong about that, and that's, it is what it is. It's just insurance from a portfolio anyways. But I think I might end up being right in the end in this. We'll see how it all plays out, okay? Now, in regards to their latest earnings, right, I gave them a B overall grade for their earnings. I thought they had, some good numbers overall. There was a couple things that were problematic. Food, beverage, and packaging costs went up for the company, and general administrative expenses went up for the company as a percent of revenue. That's not something you want to see. A lot of other line items were pretty good for the company overall. The labor one looks pretty good, 25% versus 25.6%. But once again, this is for 2023. We haven't been hit by the crazy insanity of wages going up in 2024, and specifically for Chipotle's biggest market, which is California. And so don't be surprised if that labor number skyrockets for the company, and that's going to cause a lot of fears if that starts to skyrocket for the company in 2024, and I don't see a way out of it for Chipotle. I just don't see a way out of it, folks. So anyways, that's my insurance. That's some hedge there, and we'll see how it works out there, okay? Appreciate y'all joining me as always. Don't forget, pin comment down there. Make sure you follow me on Twitch so you can join me for that PayPal conference call tomorrow. Don't forget about that, baby. That's going to be crazy. And the earnings coming out live. And the second pinned comment down there is to join my Patreon so you can see the moves I'm making each week, plus join the Discord chat. And the other one, you can also get access to my #1 stock market course ever, become Master Stock Market with that particular tier there, okay? Much love and have a great day.